Tom Porcelli, he is RBC's chief U.S. economist. Tom, did I convince you?
I do appreciate the effort. I will say that, Kelly. It's good to be with you.
It's good to have you here. Tell me what your takeaways are on the labor market and the pace of Fed hikes. Do you think the economy is going to slow into recession in the back half of the year?
So slowing, I think, is an easy case to make. The degree to which it slows, that's where I think the debate is and where we should be debating it. Some of the things that we look at do suggest that the labor backdrop is slowing down. I mean, look, I think that this number was a good number. It was north of consensus. It actually came pretty close to our number. But I would say that, you're starting that process of slowing down. It's funny. I feel like anytime we have this conversation, it's like people want it like now. It doesn't really work that way. I mean, short of turning the economy off like a light switch, as we did during the pandemic. I mean, it takes time for this stuff to develop. And I think by the end of the year, I think that the labor backdrop will be in a different spot. And so just to talk about that a little bit, because it's not just like a hunch, right? It's like, what are the things that we're looking at? So I think that there's a couple of things. So for starters, I think that jobless claims putting in the lows, they remain low, but they also seemingly have put in the lows already. I think, again, it's an early sort of sign that things are starting to slow down. One of the things that we highlighted in our note yesterday is if you look at something like the Beige Book, we have a Beige Book labor shortage index, which is basically just measures the amount of times labor shortage is mentioned. That has slowed in a pretty meaningful way. And if you layer on top of that something like the Conference Board's labor differential index, that is also now in the midst of seemingly slowing. So I think that there are a lot of indicators that suggest that we're moving into a sort of a slower plane here.
But are we all being confused by sort of as it's called the second derivative effect here? In other words, just because it's slowing doesn't mean inflation's not still going to be with us for some time. None of this points to us slowing enough that we're going to go back to anything like 2% inflation anytime soon.
Yeah, and look, and you're speaking to someone who actually thinks that inflation will be quite a bit lower than I think a lot of people have been talking about. But even I don't expect, core inflation will get back down to, call it 2%, not anytime soon. I do think that you'll get to a slower pace. And I think it could be a pace that actually makes the Fed feel comfortable as we get to the end of the year. So, I would define that as, if you're holding a three handle on core inflation, I think that that's probably something that would make the Fed feel comfortable. And I thought it was really interesting yesterday. I mean, for all of the things that everyone seemed to focus on from Lael Brainard's comments yesterday, I think the most interesting thing that she said actually related to the idea that, they're now really focused on, or she is focused on core over headline inflation. That creates a much lower hurdle to sort of, feel more comfortable with prices.
But are you saying you think core inflation is going to slow from 6% to 3% in there's only 7 months left in the year?
Only 7 months. The only part I have a hard time with. I mean, I think what you have to keep in mind is that if you look at the goods complex, I think that you can easily see a lot of these components really disinflate. Used car prices are a great example of something we think will really start the process of slowing in earnest as the year continues to progress. So I think, again, our official forecast is your 3.8%, 3.6 from a core perspective. So I think that, that's actually not a hard case to make, just given the fact that you're going to see probably some disinflationary forces show up in some of the goods components. But again, you're still going to be elevated. It's just, is the Fed going to feel comfortable with that?
No,
I think that's something that they need to start to outline.
I would like to hear them talk more about the transition from goods to services inflation because, yes, used car prices are down, but like Randy Krauser was reminding us the other day, airfares are way up. Energy and input to pretty much anything, goods or services, continues to be at more or less record highs right now. You have labor market. That's why we're focusing so much on the labor market. You want to know the future cost of childcare, elder care, health, like you name it. That's all going to come from a tight labor market, and it's only pointing higher.
Yeah, I think it's such a great discussion point. So one thing I would highlight is particularly those airfares. It's interesting. Airfares rose, near 20% last month. There was, I think, 11% the month prior. It took a 20% month-on-month gain to show up as a 0.1% gain in the headline, right? Think about that. It just drives home that the weight of some of these service components are really, really small. Now, the single biggest weight in inflation in general, but certainly within services, is the shelter component. And we expect shelter will remain very firm over the balance of the year. So again, I think you have to remember, if I think about airlines, airfares, think about what one of the easiest things to cut from your discretionary spending is if prices get a bit too elevated, something like airfares. Again, we have firm airfares embedded in our current month CPI forecast. There's going to be 1 month where that thing just falls and probably falls pretty hard. If forecasting, that's a little trickier. But I have no reason to believe that it'll happen anytime soon because there's still a lot of demand for travel. All
right. I want to do a Twitter poll. Team Kelly or Team Tom? That's just a joke. I don't even do that. You're the economist, but I appreciate
I love the idea. I love the idea.
Really good counterpoints, Tom, and thanks for the discussion. It's good to have you today. And I'm glad the sun came back out behind you, by the way.
Yes, thanks, Ken.
Tom Porcelli with RBC.